Hey everyone, let's take a look at how to figure out the cash flow going to the owners. So in this case, we need to figure out what our dividends are being paid out, our distributed earnings, and finally, what change in common stock that we're borrowing from our owners will be an increase or decrease. As you can see, I've already actually completed both the income statement and the two balance sheets. Okay, so we've already done that. I know by this time now you're quite fluent in that, so I don't want to waste your time. So let's take a look at how we figure out our distributed earnings. Okay, so you can see distributed earnings is equal to our net income minus our change in retained earnings. So our net income has been figured out for us here. Okay, and the change in retained earnings is going to be the 2017 minus the 2016 change. Okay, so the difference between 2017 and 2016. Okay, so once we figure that out, we can figure out what our dividends are going to be paid out. So we're going to subtract. Okay, and let's put that in for our first entry. All right, looks good. So let's move on to our next question here. Is figuring out the new net borrowing from owners. Okay, so in terms of the equation, that's going to be our ending common stock and paid in surplus minus our beginning common stock and paid in surplus. We don't have to worry too much about paid in surplus. It's more about whether or not you pay a premium for a stock. We might deal with that later, but for now, we're really just going to take a look at our common stocks. Okay. So again, our ending common stock is going to be our 2017 number. Okay, so in this case, here's our value here. And our beginning is going to be the beginning of the period, which was in 2016. So we figure out the difference. Okay, let's go ahead and punch that in. All right, so finally we need to figure out the cash flow to owners. And that's just going to be the difference between our distributed earnings or our dividends minus the net new borrowing from owners. So in this case, it's going to be our dividends minus the net new borrowing from owners. All right, wonderful. Happy financing.